Hello and welcome to another update video about Ethereum. It's getting difficult now. I mean, actually with Ethereum, everything is fine. Ethereum is still in this box, in the target box, and it's not a problem at all. I mean, yesterday even we talked about a target of 1160 and we have come down all the way up to, or all the way down to 1170. So it's not a problem at all actually. Ethereum is doing what it was supposed to be doing in this sort of, well, what do we have? A, B, C wave pattern, yeah. But my problem is that Bitcoin is about to make a new low, even below the June low. Well, the June low was broken anyway on the 9th of November. So it's going to break that again. Most likely, that's how it looks like at the moment. While Ethereum is actually making not a too bad of an impression. It's actually holding this support area. However, it's not a good sign. If Bitcoin makes new lows, then it would most likely draw Ethereum down as well. Just as the whole market is currently going down. Ethereum is still holding quite well though. It's still holding quite well. And I can only repeat what I said in the last video, which I'm going to do. And to highlight here really the 1130 level. So as long as Ethereum is holding the 1130 level, we can focus on this as a 1-2 setup, which would be followed by a wave 3. This is, as I said in previous videos, not high confidence, not high probability. And the reason is because from the, of the June, the low here on the 9th of November, we don't have an impulse. Yes, we have a 5-wave move up, but only, and really only if we consider the 5th wave as a truncated wave, which is not ideal because it doesn't have the ideal length. So it's a bit of an issue, and we, you can get away with it when you force it, but it's not really how you would normally do it. And the other possibility is that the move up from the low is a 3-wave move, and that could be either corrective, which will lead to an impulse down, which basically means lower lows, or it could be a so-called leading diagonal. And in a leading diagonal, you can count a wave 1, and this would be a wave 2. But then each of the subwaves has 3 waves, and it's not a high confidence pattern because it could easily be counted as corrective as well. So typically when you see a leading diagonal, what you would want is you want to see the evidence that things are really turning out and playing out. So you want to see the 5 waves complete to get more confidence into the pattern. So it's not an ideal pattern of the low, and we've had a lot of leading diagonals in the recent weeks, and yeah, many of them didn't work out. So it's a, unless you see really a clear impulse, you have to be, let's say, on the side of caution, and that is what we need to be here. That's why there is this yellow support box, which we've touched now, which we've touched here on the 11th of November. Now we've come deeper into it. We've basically fulfilled the scenario from the previous video, which is going down to around 1160. Okay, $10 still missing. But at the moment, there's also no sign of bottoming out. So this could go down further. And the concern is really that if this just keeps dipping, we're going to break the 1130 level as well. So we can draw a price channel here. And if that price channel is breaking, this corrective price channel, or even impulsive price channel of the wave C, then we have clarity, or more clarity, about the trend direction. Because at the moment it's just following the trend, it's just following the channel here, and a move down wouldn't be good. It would increase the likelihood of it breaking the 1130 level as well, and then heading down to 1075. And if the 1075 level breaks, there's really only the $1,000 left, the $1,000 level left, which will protect the bullish scenario, as we talked about yesterday only. If you go to the daily chart, below $1,000 there in June, there was really only a wick. So there isn't really a lot of key support. So the $1,000 level is really, really key support. If you look at it on the daily chart, you can actually see that. This is where it stopped falling, and the wick down, it was really just that. It was just a wick. So that is the key level here. I think if that level breaks, we're also going to retest the lows from June. So yeah, it remains difficult. It just keeps sliding at the moment. This very well could just be a C wave in this wave 2. But again, it's not high confidence because the move to the upside was not a clear impulse. It's certainly a good sign that we're holding in the yellow support area, but it just keeps dipping. So as I said in the last video, unless we go above 1284 impulsively, this level here, and even better would be a move above 1350, we just have to keep focused on the downside. Yeah, that's what I mentioned in the last video, because we want to see evidence that it's bottomed. Unless we really see that, we have to focus on the downside because the move up is not high confidence. And the 1284 level would be some evidence because it is the wave B high. A break above the wave B high is always some kind of a signal that a downtrend is stopping. Okay, that's my update about ETH. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.